All right, everyone. Tim Davis here coming to you guys with a midweek market review. I've been a little busy this past weekend, so didn't really have time to really do something this past weekend. So I figure got a little bit of time now. Go ahead and try to record something real quick just to show you guys where we're headed, where the markets, what the longer term charts are showing us now. Um, Definitely still in this downtrend. I want to start by looking at the SPXA 200R, which is the tool that tracks overall market sentiment and how bullish or bearish how bullish or bearish the market sentiment is. Right now it is extremely bearish. This tool pretty much tracks the amount of stocks that are trading below or above the 200-day moving average within the S&P. And remember I said before the 50 level, 50% is the like the magic mark to determine how bullish or bearish the market is, and we are well below the 50% level. Right now we are trading at 35%. So 35% of the stocks of the S&P are still above the 200-day moving average, and that means about 65% is not. We're still in the steady downtrend, as you can see here, in a downtrending channel. So you see this range here, this channel here. I got here with these two white dash lines. That's the downtrending channel that we're in. We're at the bottom of a channel where we have seen a bounce before in the past, but is that likely to happen here? We got to wait and see, but looks like we are stuck in this downward trending channel, and we're about to break a major level of resistance, support, if we don't get a bounce here. So you can see we're right there. Last time we were right there around about in May of this year. Got a little bounce there. Also around about between February and March, got a little bounce there. So, but this is like a well-defined channel right here. So it's a huge possibility that we could break this and head lower. And if that's the case, we're going to see markets really continue to give up major levels of support. So that's where we're at right now. We got to see how we transpire the rest of this week. But right now, we are definitely stuck in this downward trending channel. Overall, this market sentiment, which is what this tool does, tells you the overall market sentiment. And the overall market sentiment is extremely bearish right now. All right, now let's take a look at, and this is on a weekly chart too, by the way. And if we was to switch this for a second over to let me get rid of some of this first. All right, now let's switch this over to a quick look at a daily chart. Get to it. Here's a daily chart. Again, definitely right at a level that we could see a bounce now. Before, and as you can see, that you could really tell the bears really in control of this, because previously we had a little doji right here, and markets tried to bounce it, then the bears took right over, pushed it right back down. So you can never really count on what you see to be exactly what's going to transpire. It depends on how bullish, how bearish we are. We are extremely bearish right now, and markets try to get a bounce here and came right back down and went down to another lower low than the previous low where that doji was. So it's like we are pressing to break below this 35% level of this SPXA 200R. And if we take a look at a monthly chart, you see how bearish it is with the oscillators and the full stochastic 6 wins percent of CCI all pointing downward. TTM squeeze just about to turn negative or red on this particular tool. And again, you see where we're right pressing against that 35 level. Looks like we want to really, looks like we really want to punch through it and go lower. And that's just detrimental for our market. So if market doesn't see a bounce here, then this downward trend is just going to continue until we go lower. Again, my ultimate goal, my ultimate target, what I really see is us heading right back down here to this space down here, right before you get to the zero line, where we got close to it before. Back in September 2022, we got it right around 11%, and we could very much see that. before this year is out. That means the overall market will continue to go lower. If we see the sentiment tool go lower, the overall market's going to continue to go lower. All right. So now that I broke that down, let's take a look at the VIX real quick. Here's a monthly chart of the VIX since we're on a monthly chart. And voila, definitely see a reversal. Well-defined reversal. We are above 20, folks, in the VIX. That's extremely bullish for the VIX, extremely bearish for our overall market. And look at the oscillators. Look how we got a buy signal on the monthly chart and the CCI right there. You see the Williams percentage that's now out of the oversold territory, as well as the full stochastics. Like a buy signal there, and it's like it's just starting to head up. So this could be a really, really strong momentum for the overall VIX, which is showing you how strong this downturn is starting to be in it with our overall markets. We're approaching some levels where we could see some resistance here, but this move, folks, on the monthly chart, it just looks extremely strong for the VIX. So the markets could be in store for some real pain here soon. I mean, we're already starting to see real pain, but it could be just beginning. Put it to you that way. It could be just the beginning. So kind of wait and see how this pans out. But right now, this looks extremely bullish for the VIX. Let's back it out. Back it out to a weekly chart. Weekly chart. Oscillators and Williams percentage. I mean, in the CCI at least, the Williams percentage showing overbought territory. Does that mean we're ready for automatic reversal? Not necessarily. Got to wait and see how this pans out. Right now, these weekly charts are extremely bullish. Like we was gonna get a reversal here, this candle, and all of a sudden, boom, another leg higher with the 200-day moving average. 200-day moving average is this red line sitting right around 23 on the VIX. So could we easily march up to that 23 level and touch that 200-day moving average? That is a huge possibility. And then we have to wait and see if we do make it there. Have to wait and see what happens next. But right now, the bullish momentum in the VIX is extremely strong. So would not surprise me to see a push up to this 200-day moving average and even push through it. So we got to wait and see. But right now, this momentum in the VIX is extremely strong. Here's a daily chart on the VIX. It doesn't like it wants to give up either. Like it's trying to start another green candle. So it looks like this momentum in the VIX, overbought territory, that could stay that way, folks. It could stay that way. You see how strong this momentum is in this VIX. Look how this out. Look how we getting. I told you guys before we was right now close to this 13. This was a level of support. Bounce from that level all the way up to its 200-day moving average. Look what happened. It started to consolidate around here. Came back down below the 200-day moving average and bounced right back up. And it didn't take long to do that either. So this momentum, folks, is extremely strong. And it looks like we continue to see this zigzag action forward. We could continue to see this type of action. This strength and this VIX is extremely strong. So, and there's a lot of other variables going on within global news, global economy, everything. There's a lot of things going on within politics that are all just fuel for the fire that could continue to push this price action higher. And give Fed a reason to keep rates lower for longer. So there's a lot of things that can be fuel for this market action that we're starting to see. So that's the strength of the VIX. All right. Now let's take a look at the SPY ETF for the S&P. So you see the strength of the VIX and the weakness of the SPX 200R. You see how it's spilling, how it relates to the overall ETF of the SPY. Right around the 200-day moving average on this daily chart. The 200-day moving average sits around about 419. We're right now around 421.59. So could we see a bounce in 419? We could. But if you look at and the strength for this is just extremely strong for the bears. Like we are hanging, staying in oversold territory on this daily chart. Let's take a look at the weekly chart real quick. Look at the weekly chart. We look definitely oversold territory, coming up on a pivotal moment where we could see some type of pause, and it could be a pause or it could not be a pause. We can march right through this, folks. It depends on how things pan out. But the SPY is approaching the 50-day moving average, which is right around 415. So could we see a little more movement to the downside? We could. TTM squeeze, definitely looking bearish. Like the momentum upside is really starting to fade. Like we're starting to turn soon. Like we could be hitting some red bars here soon on the TTM squeeze. CCI looks oversold. It's like we maybe are trying to turn up. We got to see on this weekly chart. Wins percentage oversold territory. Could we stay here? That is also true. The strength in this downward trend is extremely strong. So we have to see if we're going to get a hold up right around this 415 or 416 level on the SPY. Have to wait and see. Do we get a bounce right here where we at now? Wait and see, but we're in an area of support. So we have to wait and see how this pans out. Definitely right now the strength is leaning towards the favor of the bears. If we glance at a monthly chart, looks like the selling is just getting started on the monthly chart. So we pan this out, monthly chart, we could definitely, before this year is out, we can see price action way down here, the 50-day moving average on the monthly chart, which would take the SPY down to around 388, 390. So again, folks, it's any I continue to say this, any rally we see, any bounce we see, it's probably going to continue to be short-lived while the bears have their teeth sunken into this market right now. And like the bears are in full control. So like we are definitely in a reversal pattern. All right, that is a look at the SPY. Let's take a look at the DIA, which is the Dow Jones ETF. Since we're on a monthly, we'll start off with this monthly. Again, you see this well-defined downward trend line that I had drawn from this 369 level down to where we are now, hit a pivot point here, and we're starting to head lower, heading back down towards this 50-day moving average, which is around 318. And it's like the oscillators and the full stochastic wins percentage and CCI are all heading lower. So these next couple of months could be very, very crucial and brutal for stocks. That's the longer term picture. Here's the weekly chart of the diamonds. We have broken here and down. We have broken the 50-day. So we looks like we really want to shoot towards this 200-day on the diamonds. And that's around 318. And starting to reach oversold territory on CCI. But could we go deeper? We could. We could. All the scenarios point that we could go deeper if we don't get a bounce here and come back up towards this 50-day. We could be heading down towards this 200-day on a weekly. And here is a monthly chart, which looks extremely bearish. You see all the signs of reversal. We have broken below this triangle pattern that the marks were trying to keep price above. Came to this triangle pattern and didn't punch higher. We dropped lower. Right now, we could be heading towards over the next several months. We could push all the way down towards 313 on a monthly. So between now and end of this year could be, again, between now and end of this year, beginning of next year, we could see brutality in the markets. And here's a daily chart. Well-defined break below the 200-day moving average on a daily chart. So we are in some extreme bearish territory. Look at triple Qs. Triple Qs. Right at a level of support. Like it tried to get a little bounce, but look at the oscillators in the wins percentage. It went up and came right back down. Oscillators in the CCI, like it tried to go positive, but it's like it's ready to come right back down. So the strength in it, and the bears are really trying to put a stronghold in this market. Here's a weekly chart. The triple Qs, right at level support. It's like we're ready to break this, folks. So weekly chart doesn't look strong. It's trying to hold support here. Right around this 355 level. Do we hold it? Do we keep it? Tomorrow will probably be the tell. We break below the 355 in a major way. We're gonna probably see some sharp movement, continue sharp movement towards next levels of resistance. If you look at the weekly chart, support, I'm sorry. Next level is right around 336. And if we break through that, we could be right around this 50-day moving average. So momentum is still in favor of the bears. And here's a monthly chart. Monthly chart looks like it shows you that we're just getting this pivot lower started. The oscillators in the full stochastics is just about to come out of overbought territory on the monthly chart of the triple Qs. Same with the wins percentage. CCI just crossing with the sell signal on the monthly. So again, these next several months, next 3, 6 to 8 months or so could be very brutal for stocks. Nothing wrong with jumping into some bearish position, which is what I did actually have on several of them. Just sitting back and then watching them flow. One more we look at before I end this session, IWM. This one looks extremely bearish. It's just giving up the ghost in a big way. IWM it never really materialized trying to get above this 50-day moving average in a big way. Peaked its head above it, came right back down. It's monthly chart. It's like we're ready to break a key level of support. So a very strong key level support right around one. That's around 165. I want 165. Key level support. We break below that. You can see a huge movement lower in the IWM. Here is a weekly chart of IWM, definitely below the 50-day and the 200-day moving average, and like it's ready to solid red candle on the weekly chart. Like we could be definitely headed towards that 165 level in no time. And here's a daily chart. Look how strong. Look at the volume as we're dropping. The volume is increasing. See this volume? Volume bar is increasing as we're dropping. That is a big time bearish signal. Like the selling is intensifying, folks. So, all right, wanted to point that out. And just for the sake of it, this is a bearish position that I've been in for a while. Lows. I saw the big turnaround on some of the longer term charts into a bearish position in this one a little while ago, and actually took profits and got back into another bearish spread on this one, and like it just continued to trend lower. So I've probably been in this position since we were right around this 335 level. And then, I'm sorry, I'm around 235. Now we're at 200 and trending lower. So I'm in a second spread. And so this has been a very profitable trade with a bearish vertical put spread on lows. Here's a monthly chart. Look at this. Look how well defined this pattern is. Was at 263 right around the beginning of 2022. Came down towards this 50-day moving average on the monthly, and pretty much stayed almost even between this 217 to 200 level for quite a bit. Little pump here, and then look at that nice reversal right back down. It's like we could be about to break this 50-day moving average on the monthly. Oscillators and full stochastics, wins percentage, CCI, all bearish. Just an example of one way to take advantage of what's happening in the overall market. All right, folks, all I have to share with you guys right now. Hopefully this is something that you guys can use. And since it is early morning hours, before I jet out of here, we will glance at the futures market to see where we are heading right now. Take a look at the futures market on the VIX, VIX. And Look at it daily. So here's it is extremely bullish, folks. Look at that. So futures market on the VIX shows the VIX still above that 20 level. Looking at the futures market on the VIX. Let's take a look at the futures market on the Dow Jones. Right now, right around 100. So still shows some weakness here. Doesn't look like it's ready to give up. Turn around. A lot of weakness showing. The weekly chart. Switch it back to a daily chart and take a look at the S&P minis futures real quick. Pressing right on that 200-day moving average. Look at that. Look how it's pressing right on that 200-day as we speak. Pressing right on that 200-day, also at a level of support that I've been following for quite a bit. So it's like that. It's right around 42, 47. Let's say 42, 45. So we break below the 42, 45. And let me actually switch this real quick. I want to see something. So right here, we're trying to get a bounce to this 200-day moving average around 42.30. So 42.30, I'll be watching that level as we head through the rest of this week. 42.30 is probably the next magic level. We bust through that on the downside, we can really start to accelerate lower, head to 4,200 in no time. So watch that level, 42.30. Watch that level very carefully on the S&P E-minis. NASDAQ futures E-minis. Here's the daily chart. NASDAQ futures. We are below the 50-day and out here in no man's land. Where we at now? Right around 14,700. A little below that now. So it's like we are heading, but we are below that level, 14. We're at 14,646. So we could be really heading much lower. And with the 200-day moving average in sight, which is around 13,775. So if we don't see a bounce here this week, we could really see a move lower back towards this 200-day moving average in a major way. That is a long way down, folks. On this NASDAQ E-minis futures chart. One more we look at. The Russell futures. It's been in this bearish tone for quite a bit. Like the Russell, well below its 200-day and its 50-day moving average. Like we're almost ready to cross with they call it death cross. It's like the 50 days ready to cross below the 200-day. It's like Russell shows some support. Right where we stand now, around 1730, 1720, 1727. We break below that, we can definitely see a move all the way back down here towards the 1640 level. Those are some key levels to pay very close attention to as we continue trading throughout the rest of this week. Let's take a look at the weekly chart of the Russell futures. Definitely in a downward trend. Strong downward trend too. Looks like we're definitely heading towards this 1640 level. So just some things to take a look at, folks. Some things to keep in mind as we continue in this downward trend. The VIX is extremely strong. And overall markets are trying to find some footing. Every time it tries to find some footing, it reverses again. So again, any bounces, folks, has been shown to be short-lived. All right, folks. That's all I have for you guys. Enjoy the rest of your week. Enjoy the rest of your day.